Very excited to be here. Thank you to the Panathēnea team for organizing such an amazing conference. Markus, thank you for coming.
Awesome to be here.
So we want to split up this conversation in 3 sections. The first is on Markus's story as an underdog and building a European, really exceptional company. The second is on how a homegrown winner really scales and becomes global. And the third is on the road ahead and how Europe and we can learn from the success of Bolt. So most people in the room, Markus, know your story. 19 years old, you had 5,000 euros to start the company. You took on Uber. And I'm curious, when you first started the company, what were the secrets to underlie building in a space that a lot of people knew there were very large incumbents? And why did you decide to go into such a competitive space?
Great question. I think fundamentally every entrepreneur should bet their company on a secret or some advantage that others haven't observed yet. Otherwise, you're just going to be competing with no real advantage. And I think for us, it was mainly 2 things. So first of all, it was network effects, where I just fundamentally understood much earlier than everybody else in the industry of how exactly the dynamics work in the field of ride-sharing. And looking back, I think it was quite obvious why that happened, because I liked to study math and go to computer science Olympiads and so on as a kid. And so I was already solving these kind of problems before. And second, I think I was always quite comfortable being contrarian. So in school, when I was having arguments with my teachers and so on, then I saw my classmates would usually back down. I was sort of very fine challenging authority if I saw that something didn't make sense. And so then when I was 19 and everybody was saying that this ride-sharing world will be impossible to compete in because the network effects are so strong that Uber will be very dominant, I was like, this doesn't intuitively make sense to me. And so when I started plotting out the math of how many drivers you need in order to build a well-functioning service for customers, I realized that everybody else was undervaluing or overvaluing this effect a lot. And therefore I was like, hey, actually I think this is absolutely possible for us to compete in. So if you then take that insight, you're going to design the company very differently than if you were to design it if you think that there's a monopolistic network effect. So that was really the first core insight. And the second thing was that I think all the investors in the world were very focused on the traditional Western European markets. So they thought that if you raise money and you want to build a big business, you have to go to Western Europe or you have to go to the US. And again, I think that was an out-of-date view, because the world had grown so much larger, everybody had smartphones, so when you ran the math, you realized you could build a $10 billion business without going to those places. You could build it in just focusing on the emerging markets like Africa, Central Eastern Europe, and so on. So it was very obvious to me that, hey, if I just combine these 2 insights, you can build a massive business and then later go and challenge the incumbents in Western Europe as well.
Amazing secrets, and especially around being contrarian and non-consensus. I think more founders should kind of zag when everyone's moving in one direction. I'm curious, there's a moment for every company where the world stops treating you as a startup and you're really a threat. And I'm curious for Bolt, you started Estonia and it's now a global company. Typically in the inception of companies, there's one thing that really moves the needle. I'm curious for Bolt, what was the one thing that really made you legible to drivers, to investors? When did Uber start paying attention? When did the largest people start saying, hey, we need to figure out what is going on in Bolt?
Sure. I think we had a bit of a unique story there because for us, it really happened in very different sequences depending on the stakeholder. So I think that we were already credible in 6 months in our home market of Estonia. We were able to build such a fantastic product that thousands of customers and drivers very quickly realized that this is obviously a great product, and we very quickly became the household name there. And that actually continued being the case, where we just progressively kept on launching more and more markets. We were in a couple of years, we were operating in 15 countries, and we were really just spiking in popularity. Revenue growth was 600% year over year. So very clearly, customers and drivers resonated with what we were doing. But that was very different from investors. So despite us having this phenomenal growth of revenue, which was quite unprecedented for any European tech company, it was still very hard for us to raise money, because most of the investors were so bought into this herd mentality that there's going to be one winner, there's no room for anybody else, that it took us a lot of time to convince them otherwise. And that's actually the reason we first raised even money from strategics like Mercedes, because the traditional VCs just didn't believe in the model. until we had got to like 100 million revenue, and then we were becoming too big for them to ignore. So for us, it was a bit of an unusual story.
That's an amazing insight, and just anecdotally, I was in Estonia last week, was really impressed that the quality of the human capital, a lot of people rallying together around a few number of companies and really working together. That leads me into kind of the next section on scaling to become a global business. You built Bolt from Estonia, 1.3 million people, and you've said that building in Eastern Europe as your HQ was more effective on a cost basis than building in Silicon Valley. And I'm curious, and I want to understand, was Estonia an advantage you chose or a constraint that you turned into a story afterwards?
So I'd say that fundamentally, at first, we thought that we just didn't have any other choice because we started in Estonia, so it was natural for us to hire there. And second, we were so capital constrained the first couple of years that we just anyway couldn't go and afford to hire people in London or afford to hire people in the US. So that was sort of the first constraint we were starting with. But then over the years, we genuinely understood it was a massive advantage for us for a couple of reasons. First of all, when we just look at the work ethic we've observed in people in Eastern Europe, it's been fantastic. Because, again, keep in mind, most of these countries were under Russian occupation 30 years ago. So entrepreneurialism was completely banned. There was really no economic opportunities for people to grow up. And then when they finally had this chance to join a world-changing tech company, people were so passionate about it. They were putting in so much effort. They really cared deeply about the product. And it was very hard to do that if you were just another startup in the valley. But while in our markets, we were the company to join and work for. So we were able to get the very best talent, and I think they were very committed. And related to that, I think, is the retention. So when we generally look at what's the turnover in the Silicon Valley companies, on average, it's really poor. Most engineers would join and then oftentimes quit within 2 years. So it's not really like you're willing to take, as a company, a very long-term bet of investing massively into those people. But in our case, we've had engineers who've now been with the company for a decade. So it just completely changes your mentality of how much you're willing to invest in people, develop them, how you build teams and so on. So we've really been able to turn this constraint into a huge benefit for us.
I love that. And typically a company is only as great as its people, and it's clear that you've really built a really exceptional workforce. On that point, you've said that you hire smart generalists and not deep specialists. And having no money let you attract these missionaries instead of mercenaries. At this point, you're 4,000 people. And I'm curious, how do you protect that? Or does the missionary culture kind of get eroded as you kind of scale? How have you tried to make sure that Bolt remains startup, lean, very hustler?
Great question, and something I think every company is battling with as they get larger and larger. So first of all, I think as a general principle, my view is that the world is changing so quickly, especially now with AI, and we're literally inventing new business units and business lines that have never existed in the world. So for example, when we launched ride-sharing, or then we did scooters, you couldn't go out and hire somebody who had 5 or 10 years of experience in that industry, because we were literally inventing that industry. It didn't exist before. So obviously you had to find people who are generalists, who were able to adapt, solve new problems as they went along, and that's where that saying is coming from. At the same time, there's obviously some domains in which you will require very deep expertise. So let's say something more traditional like accounting, or how to build a very well-scaling large database. For that, you can obviously find talent who has done that particular thing before, and you can really benefit from this deep talent. But that's a small fraction of the workforce, while the vast majority is a very different type, especially in our kind of a business. And then, the other part of the question, you were thinking in terms of how do we retain the culture.
Yes.
So I'd say that there's a couple of basic things we've done on that. So first of all, obviously, you got to interview for this ability of people to, again, be entrepreneurial, take ownership, move quickly, not be overly bureaucratic, and just only thinking about their own swim lane. So you can try to assess that at first. But then the other thing is that, again, it oftentimes boils down to compensation. Because if people only join you because you're the highest bidder, then you're going to attract mercenaries who want to join you for the money. But if you're actually, for example, paying them sometimes even less on the cash side of things, but then you make it up in equity, you're obviously going to filter out the people who don't genuinely believe in the mission, because they're otherwise taking a pay cut that's not going to pay for it. So we found that to be very effective.
And you clearly spend a lot of time thinking about the team formation and how the company is evolving on human capital. How much time do you spend thinking about recruiting, interviewing as a core input to the business?
I'd say my opinion on that has flipped back to where I genuinely think recruiting is the most important job for a CEO. And I think there was a couple of years where I delegated that to sort of layers down in the company, and I think that was a mistake. And what I see is that the best CEOs are putting 10, 20% of their week just into recruiting, constantly building a network, assessing talent. And even if you don't have any open roles on your direct team, then just engaging with the best talent out there is really helpful. So first of all, you're going to learn what are the other companies doing, what can you adapt in your company as well. And second, you actually see what great looks like. So you might have a person you think is good, but then you interview people for that same role in other companies, and you realize that, hey, actually there's a big step up that's possible. So in that sense, I think as a CEO, like actually putting effort into that continuously has proven to be a great exercise.
Awesome. And in Bolt, you've expanded to 600 plus cities, and you're spending a lot of time thinking about how to do expansion. I'm curious, what were some things that you learned that were underappreciated in expanding to certain cities, and what are the things that you really focus on for this growth?
Sure. So I'd say that we really invented a new model of how businesses like us do expansion in the first place. So when we first got started in this industry, sort of 2013 to 2015, when we were just starting the first expansion, I think everybody else took a very conventional approach, which was quite slow. So they went into these countries, set up a big office, hired a lot of people, which obviously brought with itself a lot of fixed costs. So that meant you couldn't do too many launches in parallel because it was operationally quite rigorous. What we decided to do, because we just had no money, we didn't have any other option, was like, hey, can we somehow flip this around and launch markets with 1/10 the cost of anybody else? So what we did, and looking back, this now seems very obvious, but in 2016, hiring people over Skype in remote countries, never meeting them, was quite contrarian. We were effectively the only company doing it in our industry. So we hired, I remember, just like 2 very junior students in South Africa, for example, just over Skype. We figured out the way how to send them money, and effectively it was like a very small skeleton crew that actually launched these markets. And that model proved out to be so much faster, which allowed us to experiment and launch 10 times as many countries as our competitors were doing. And obviously, many of those markets didn't work out. That was fine. But even if you have like a 60% success rate, if you're able to do so much more experiments at the same time, we were quicker to figure out which markets the product works, where you have product market fit, where are the ones you don't, and then you shut those ones down. And that was really enabled us just to find these undiscovered markets out of the hadn't got into.
Amazing. I want to move into the future and a few contrarian ideas, because that seems to be kind of a common theme here. A lot of the people in this room are thinking about how to build a tech ecosystem. We're in Greece and also across Europe. And typically everyone gives the same answer, which is we need to have more capital, we need to have better universities, we need to have friendlier regulation. Mm-hmm. If you were to strip away all of these things into kind of the first principles, what are the things that you would really focus on, and what would you prioritize?
Well, I think all the symptoms are issues that are genuine, and I think we do need to improve them. But if I genuinely was to stack rank what will really drive the biggest economic impact to Europe, I think the number one thing that's feasible to do is to change the financial market incentives. Because Europe is one of the wealthiest continents in the world. We have trillions of dollars of wealth that's today sitting in the wrong asset classes. It's sitting in low-yield bonds, making like a few percent. It's just sitting in like just bank accounts, especially in Germany and then some of these Western markets. And that applies to pension funds, to insurance funds, and so on. So again, when you then look at what the US is doing, it's completely different. So for example, if you look at just regular everyday people, regular retail customers, in US, the daily trading on the stock exchanges is almost 30 times higher than it is in Europe. And it's not because Europeans don't have the money. We just don't have the culture of taking risk, buying equities, and investing the money we have back into accelerating the economy and accelerating the business. So if there's one thing we could do, it's how do we reform that? How do we get a bigger fraction of the pension funds and insurance funds and people investing back in the public markets, back into equities to build the next generation of companies? And today that's not happening. And back of the napkin, I mean, Europe is losing 2 to 3 trillion of value every year as long as this is happening, which is insane. And if you were to fix this one thing, that's going to trickle down into lower cost of capital for our companies so they can grow faster. It's going to get much back into VCs, universities, etc. So I think this is just like going to be a massive transformation and accelerate Europe.
It's a great point around the financial incentives in the markets. Shifting a little bit to technology, I know you're spending a lot of time thinking about autonomous vehicles, and you've said that Silicon Valley has this all wrong. And I'm curious, why is everyone in San Francisco wrong about how autonomous is going to evolve? And then also, how can Europe be a leader in this new technology which is going to reshape cities and urban infrastructure and how people move around?
Sure. So actually, this is something that has a lot of parallels to this original just contrarian thinking, first principles thinking when I look at the world of autonomy versus the original network effects in ride sharing. Which is, again, when you look at the consensus view, I think every VC out there has so bought into this mantra that Tesla and Waymo will be the only companies who can build a self-driving car. But then when you actually start to zoom into it, you realize that this is quite a bounded problem. It's not like a driving experience will go infinitely better the more data and the more compute you throw at it, which is what we're observing with LLMs, right? So if you think about LLMs, the intelligence is theoretically unbounded. You can always make the model smarter, and people are also willing to pay for that incremental intelligence you get. So that is why we're seeing these runaway effects where Anthropic and OpenAI just keep on accelerating, making better and better models because people are willing to pay for it. Now, that dynamic just does not apply in driving. So if you think about it as a driver, every average person can drive. We literally have billions of drivers in the world. And if you think about, from a regular user experience, like, do you need like Hamilton to be your driver? I mean, versus the average taxi driver. Like, it doesn't get so much better as an experience. So very clearly, what you need is a sufficient amount of data, sufficient amount of compute to make a driver that drives good enough and is safer than a human. But it's not like an unbounded problem where you will need to invest 100 billion in order to make it infinitely better. It just doesn't make sense. So if you take that very basic principle, then it's very clear that like just by investing a couple of billion with the right talent, right compute, right data, Europe should be able to build it. And I think it's existential for us because 10% of European GDP is making cars, whether we like it or not. And I just don't see we will have a future of our automotive industry unless we're able to build cars that drive themselves. And we just import this technology from China and the US.
So on that point, I know you think about a lot of you think a lot about European policy and how can Europe really maintain a competitive edge in certain technologies. What are some things, maybe like the top priority on how Europe can both protect its markets but really lead on the edge and redefine the frontier?
Yeah, I think this is quite a sort of emotional debate or something that Europe has been very naive about, is what do we do about protectionism? Or nowadays, under the new term, we call it sovereignty. But the reality is, so when you look at the world of technology, it's dominated by the US, and the only continent or only country that's able to put up a fight of nearly equal terms is China. And Europe is very clearly very far behind today in the race, despite us having a lot of potential. So then if you study what did China do, very explicitly 20 years ago, they decided to opt into protectionism completely of the tech industry. And that is what enabled them to build this walled garden of companies that they have their own social media, their own internet, et cetera, et cetera. All these companies that we don't have in the West that are worth hundreds of billions, like Alibaba's and Tencent's and so on. And obviously, I'm not advocating that you should do it blindly in every industry and long term. That will just make you under-competitive. You can't do that forever. But I think we should be taking lessons from China in the right sectors of how do we actually build these local champions, and we don't just let them get wiped out by US companies that are valued at 5 trillion and have the capital to subsidize it.
Amazing. Well, Markus, thank you so much. We're very excited about the Bolt vision and how you continue to push the frontier. Thank you.
Thank you.